Sunland Group profits are down. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. Got my stein of coffee and I thought we would look at the financial full year profit of Sunland Group. Now if you're not familiar, Sunland is a developer here in Australia and they do frankly some quite beautiful work, lovely buildings, and here's just an example of their portfolio, some of the residences. They seem to be quite active in the residential market and particularly the challenging market now with a lot of the high-rise towers. Although, they've got quite a good reputation in the industry there. I've got a few uni friends that actually work for Sunland. I think she worked on this one. Yes, yeah, she designed this one. So, nice townhouses, good reputation. Do you think they're going to be affected by the current state of the residential market? Well, yeah, they are. I think it's a sign of where things are heading. So let's have a look. So it was established in 1983. So this is their letter to the ASX. Sunland Group announces full year profit of 17.7 million after tax. Sunland or Group today announced a profit of 17.7 million after tax for the full year ending 30th of June 2019. And that's compared to 34.7 in 2018. The result includes a 9 million after-tax net realized value NRV adjustment made early in the year following a strategic review of the group's Bayside project in Townsville. Not surprised. It would be, the northern part of Queensland, Townsville, with regards to the slowdown, shall we say, in the resource sector, particularly the mining boom. So financial year 2019 operational highlights are as follows. Net tangible assets per share increased to 2.56, representing a growth of 4%. Increased balance sheet capacity with 19.8 million in cash and 185.4 million in undrawn working capital lines. Overall gearing has reduced to 24% debt to assets and 36% debt to equity. So that's down from 29 and 48 respectively in 2018. The group declared a fully franked final dividend of 4 cents per share, bringing the full year dividend payments to 8 cents per share, representing a payout ratio of 62%. 13 million site acquisition of Curram Downs, Victoria, and an additional 6.8 million committed to a site in Merilla, New South Wales. Earnings per share based on issued shares at 30th of June 2019 of 13 cents, down from 23 cents in 2018. So this here is a big change from one year to the next. So, one would hazard a guess that the challenges in the market are being felt, particularly in the products that they deliver. Strong forecast cash flow generated from existing projects. So, Managing Director Saba Aberdeen said the underlying result of 26.7 million prior to the NRV represented a sound earning profile in a softening property market. So once again, we have another professional and developer publicly admitting or declaring that it's a softening property market. Contrary to everything else we're hearing in the news, go rush, buy. Yeah. The headwinds in Australia's residential market have had a significant influence on the slowing rate and volume of sales across the property sector during the past financial year, Mr. Aberdeen said. While these are being offset by the introduction of structural reform in the finance sector and historic low rates, it is unlikely that market conditions will improve significantly in the short term. So he doesn't think it'll improve in the short term. Do you think it'll improve in the long term or the medium term? I think we haven't really felt the recession yet. And there's still the stigma of multi-res construction, regardless of if you're involved in it at all. It's going to have an issue. A lot of people are going to lose confidence. Accordingly, Sunland Group is focused on strategically positioning the company for the next phase of the cycle through a conservative approach to project delivery and identifying opportunities for replenishment. Mr. Aberdeen said Sunland's underlying operational performance is attributed to settlements across Sunland's residential developments in southeast Queensland and Sydney. The group's multi-storey segment also contributed to the result from settlements at Marine Concourse on the Gold Coast. Sunland remains focused on delivering a consistent performance during a prolonged and challenging phase of the market cycle, which is being achieved through geographic and portfolio diversification, he said. Let's have a look at their operational highlights. Sunland launched 2 housing projects during the 2019 financial year, including the Kirkdale Residences in Chapel Hill in Brisbane's inner west, and a land release at the Terraces in Paringa Springs on the Sunshine Coast. As of the 30th of June 2019, the group had 13 active projects along Australia's east coast, and a $3 billion portfolio comprising 4,292 residential homes, urban land lots, multi-storey apartments, and an emerging retail and commercial portfolio. This includes the luxury 44-storey 272 Hedges Avenue high-rise in Mermaid Beach, and the boutique Magnolia Apartments mid-rise apartment development in Palm Beach on the southern Gold Coast. Mr. Aberdeen said Sunland achieved revenue from property sales of $277.6 million, so that's down from 2018 of $321.6 million during the period. Generated from 382 settlements, that's down from 487 settlements in 2018. So I wonder if the difficulty in acquiring finance is affecting that rate. Our Queensland projects contributed significant revenue to the full year results, including the Lakes Residence, Shea Residence, Marina Concourse, and will continue to do so in the year ahead as other projects approach completion, Mr. Aberdeen said. 18 McPherson Street in Wirrawood, Sydney, and the Gardens Complex in Chirnside Park, Melbourne, also contributed to revenue during this period. Contractual pre-sales for projects that have been released across the development portfolio total 178 as at the 30th of June 2019, with a combined value of $192.4 million. The portfolio achieved an average return on costs of 25%, including the NRV adjustments, exceeding Sunland's target development margin of 20%. Post-balance date, Sunland settled the sale of its Lakeview Retail Centre in Mermaid Waters, Gold Coast, for $20 million, with the $6.4 million profit after tax contributing to the 2020 financial year. Of the group also settled the sale of a greenfield site, Ingleside, Sydney, also contributing a profit of $4.9 million after tax during the 2020 financial year. So site acquisitions. Strategic site acquisitions in Victoria, Caraway Downs, and an unconditional contract post-balance date for a development site in Marilla, northwest of Sydney, totaling $19.8 million, and added 202 allotments to the portfolio with an estimated end value of $113.3 million. So capital management and dividend. Over the past decade, Sunland has undertaken a series of share buyback programs which have reduced and consolidated shares on issue by 58%. That's interesting, isn't it? We're seeing this more and more. I'm hearing more about this, particularly in the United States. So you can artificially, buy back shares, so your earnings per share increases, but you haven't really had to do anything or increased your revenue if you're doing a share buyback. So during financial year 19, the group acquired 11.1 million shares for a total value of 17.7 million, increasing the net tangible asset value per share to 2.56. So there you go. Is this how they increased the value of the NTA? By doing the share buyback? I guess it's been over the past decade. Well, no, in that year they acquired 11 million. Well, there you go. That's how they did it. Now, see, I'm learning something new every day. Directors declared total dividends of 8%. Total dividends of 8 cents per share, fully franked, for the period, comprising an interim payment of 4 cents per share, paid 20th of February 2019, and a final dividend of 4 cents per share to be paid 20th of September 2019. Future outlook. Mr. Aberdeen said the 2020 financial year will present both challenges and opportunities, as evidenced by the softening conditions in the current phase of the property cycle. Sunland is focused on delivering a stable, consistent performance during a period of continued adjustment and consolidation in the market, he said. This includes a strategic approach to geographic and portfolio diversification and weighting our residential portfolio towards the owner-occupier segment in strong-performing markets. The group's mid-rise apartment portfolio will also continue to expand as part of an integrated housing strategy that enables us to mitigate risk through staged delivery. Mr. Aberdeen said Sunland's board of directors is directing every effort to maintain a conservative balance sheet and will evaluate all future project releases in line with this strategy. Sunland's strong balance sheet and access to capital continues to provide a stable platform from which to maintain profitability and deliver sustainable shareholder returns, he said. So there you have it. There you have it. So it's interesting to see. I mean, they've had a property decline. There's a softening market in this sector, and I can't imagine that anyone who's been following just the issues that have been happening at the moment with regards to the economy and even consumer confidence would be surprised. What is interesting is the share buyback strategy as a way of increasing your assets per share. Well, there you go. The net tangible assets value per share. So that looks good. And probably even your earnings per share will look better. So considering it's gone down in that year by a significant amount, that will be interesting to see with 11 million shares what it actually would have been. Anyway, guys, thank you for joining me for this episode. Please like, share, and subscribe. And I will see you all again later today. Take care.